Everyone, this is Rob Roy of Elliott Options, and welcome to TradeFinder Live. As you can see, I'm up in the mountains again. The last trip had gotten cut short because my mom was ill, but she's stabilized. So back up to finish the trip here. So it's warmer is the good news. No heat's on, so I don't think we're gonna have any coughing issues. And another thing I wanted to mention right from the beginning is the fact that I'm on one screen, not in the Dragon Pod. So John is with us all the way from Australia, who you're familiar with if you're one of our subscribers. And so at the end, he'll be directing the questions to me. So again, feel free to ask your questions in the Q&A, but he'll be feeding them to me to the single screen. So just want to make you aware of that right off the bat. For those of you that are new, real quickly, we run through this disclaimer. This is a requirement. Basically, the two primary things that the powers that be want us to make you aware of is, number one, we are not registered to give individual investment advice in the United States. And number two, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. We have a lot of international viewers, a lot of international subscribers. So that's something that they want us to be specific about. Other than that, if you are seeing this for the first time, please take a screenshot of it, read it in detail in your leisure. Other than that, the way this works is we'll go through and do a brief rundown of what the market looks like. I mean, what a crazy start to the week, up, down, it continues. I'll share some things along those lines, but also something very interesting that I think you'll enjoy if you've been waiting for the market to move. I know we all have, and one of our key indicators is showing us that we may not have to wait too much longer. We'll go through and review the latest Elliott option alerts so that you can see how our website works. We did close a nice trade on Facebook, very short trade, nice gain in a short period of time. So we'll go through and show you that. And then we'll look for a new case study consideration from TradeFinder as we do each and every week. We'll also review the ones that we've looked at over the past number of sessions, have those all loaded and ready to go. And then with whatever time we have left at the end, we'll do that Q&A that I was mentioning. So as we move to the market, one piece of educational information that I'd like to make you aware of is we're right in the middle of Zigzag Mastery, as most of you know. Comments have been very positive on it. I think people are getting a lot out of the course. Still have 2 weeks to go. But in May, we're going to do what we're calling our Strangle Mastery class. But the reason that I wanted to bring this up already is just to give you an idea ahead of time and set the stage for this. We're familiar with all the technical analysis, right? The triangles, we've been through all that stuff. This is going to be focused on the options analysis side. So we're going to get into the Greeks, the things that we've been talking about for so long. So I know you've been interested in that class. It's a class that every single person that trades options needs to know and understand. If you don't, and you're trading options, you're probably missing the boat a little bit. The Greeks are what determines pricing of options, how they move, why, like yesterday, a stock goes up and the value of the call goes down. How can that happen? These are all the things that we'll cover when we get into the intricacies of the options pricing. So we're super excited about that class as well. So we're going to go right to from one of my favorites, the Zigzag, into one of the most important, which is the Strangle Mastery, again, focusing on the options side. So just wanted to let you know that was coming so that you're excited about it. We'll talk more about it in the coming weeks, but that's just been planned out. So I wanted to share that with you. All right. So with the market, here we are, and we're looking at, okay, yesterday we had a nice up day, down day today. Doji on Friday. We moved back to the upside today. So that was to be expected.
Hi, Rob. Sorry to jump in there. We can't see your chart. We can just see the PowerPoint.
Oh, okay. Well, you're going to be able to see this Bobcat here in a second.
There you
How's
go.
that?
Thank you.
Yep, there's the Bobcat. This is a cool looking cat. We have crazy looking cats here in the mountains. He just came and jumped right in my lap. All right, so there was the doji on Friday, moved to the upside yesterday, right back to the downside today. But the key is we broke back below the 10-day moving average. So I wanted to clarify this because I posted a new SPY update on YouTube and talked about how the market was literally hanging on a cliff, and we had a meme of that. And there was some comments of, well, what happened to 420? Is that still in the cards? Well, yeah, we're still looking for the 420 level with the completion of that zigzag at 100% moving to 161.8. So that's the key point that I wanted to talk about. Once you get past a targeted price where the zigzag extended to the 100%, now we're looking for it to go to 161.8%. When you go to an extended level, you got to be on your toes because that's not a requirement. That's like an extra. That's like the cherry on top. You know, that's the part that you're not expecting necessarily to happen, but it's the next likely level if the market continues and your indicators continue to support it. So the 420 level hasn't left or changed yet, but if the market gives up this 381 level, then the whole thing changes. Then that scenario does change, and we relabel with Elliott wave and look for a different pattern. So it's really important to understand that the zigzag completed itself. We're looking for the extended level. So it's not nearly as strong to go from 100 to 161.8 as it is to go from 61.8 to 100. Does that make sense on the Fibonacci extension? So yeah, we haven't. Okay, cat's put away. So I just wanted to stress that because it was a question that came up multiple times on the video. And just to remember that the Elliott wave pattern in the zigzag, you have a 61.8% correction, you're going 100%. The 161.8 is an extension. And so if the indicators continue to support it, yeah, that's our target price. That's where we think it's going to go. But that's subject to change at any time. There's no guarantee. It's not nearly as high a probability of going from 100 to 161.8 as it is from going 61.8 to 100. Hopefully that makes sense. So the fact that we're back down and closing below the 10-day moving average is frustrating because we had a nice up move yesterday. Like, okay, are we going to get some follow through? No, we didn't. So let's go back and take a look at really where we are. And you can see where we closed today. We're going back to almost the beginning of February from where we are. And I wanted to share this information with you. I'm going to share a few things of what I've learned over the years of trading. But when we look at this, you can see that basically that's the first week in February. So we've gone nowhere. We had a little bit of a blip to the upside, a little blip down. Basically, the market has gone nowhere for 2 months. For an options trader, that is the worst case scenario. That's the one thing you want to avoid. We don't care if it goes up. We don't care if it goes down, but we need it to move in a directional basis unless you're going to trade at the money butterflies, a sideways pattern. Well, that's the analysis that I did on how long does a sideways market movement last. And the analysis showed that it takes at least 3 to 4 weeks for the sideways move to set up enough to where you can say, okay, maybe I want to look at doing an at the money butterfly. But then the average sideways market, now that varies with triangles and individual stocks, I'm talking about the market itself, is 2 to 3 months. Well, that's not enough time from the time that you say, okay, we're in a sideways market to when the market breaks out for an at the money butterfly to really work, which is why I don't do them. So that's why I don't trade sideways, because I spent tons of time, tons of analysis trying to figure out, is there a way to, one, get an idea of when we're going to move into sideways market. You've got the flat, but again, by the time you know you're in the flat, you're already in the C wave. That's not enough time. And if you identified it right off the bat, you still don't really have enough time. So the good news is for those that, like ourselves, that want to see the market begin to move in a directional basis again, we're nearing the end of that window. 2 to 3 months was the average. We're 2 months now. So anytime from this point on, we could move. And take a look at this. Look at the DMI. Look at that ADX. The ADX is dipping down. Why is that significant? Well, 2 reasons in this case. Number one, a low ADX, is one of the triggers that we use for our strangles. When we identify a triangle pattern, the low ADX tells us when the stock is getting ready to break out. It's a low ADX. It's been consolidating. The market's been consolidating. The low ADX means that that stock or whatever individual security you're looking at that point in time is getting ready to move. So not only do we have the ADX breaking down here, getting down towards that 13 level, which is so key, but look what else we're doing. We're testing the same level that we were at back in the middle towards the end of February, where we did have at least a bit of a breakout move. So there we had a directional move for a couple of weeks. Right now, that would be great because we're really balanced in our portfolio at Elliott Wave Options. We have the puts and we have a lot of calls as well. We're pretty well balanced. This is why. This is where you need to be. This is not a fun market for anybody unless you're someone that put on an at-the-money butterfly back the first week of February and you got lucky and the market's gone sideways. That's the only options trader that's happy right now. Everybody else wishes that we would have a directional movement one way or the other. We're all in the same boat as far as that's concerned. So one other plug that I wanted to give, never mind. We'll talk about that later on. So there's the movement from the fact I wanted to show you the ADX testing that low from back. And remember, when we look at our technical indicators, history matters. And so I think we're likely to see some sort of a significant move, if not in the next couple of days, very likely in the next couple of weeks, going back to the research that I did that really precluded me from, and I knew someone that really liked doing at the money butterflies. And by the time the commissions were paid, the gains that were made, it just really, it wasn't a profitable strategy to do that. But I was trying because, right, up, down, sideways, if you cover all three of those markets, you don't care. Our sideways is the strangle where we're consolidating in a sideways movement, but the profit is generated from a directional breakout, right? So we don't generate a profit from a sideways movement. And it's just been, in my opinion, that's too difficult to do. And the ones that work don't make enough money to make up for the ones that don't work. Because if you put on an at-the-money butterfly and that stock breaks out, whether it breaks to the upside or the downside, it doesn't matter. If it breaks out of those wings, boom, you're at 100% loss like that. So if you make a decent gain, it gets wiped out with less than one that doesn't work. It's just not a good strategy to go through and collect those small little credits when one bad one more than wipes everything out. The other thing that I wanted to share with you is with this ADX moving down, if we are able to get an upward move, let's show the VIX. I didn't have the VIX chart loaded up, but it begs to take a look at it right now. If the VIX does continue to come back down and we move to the upside, we're back into an ideal scenario for our out-of-the-money butterflies, the directional out-of-the-money butterflies, the strategy everybody is so infatuated with, and I can see why, because it's so low cost to get in, so high potential reward. If you get one right within a decent amount of time before expiration, can still make a nice gain, even if it moves quickly. But obviously, the closer to expiration, the more exponentially you can make. Well, look where we are. We haven't been doing them because it doesn't work when the VIX is up in here. That's not the scenario for it. The pricing doesn't work with the options. It doesn't work. So if you're wondering why you haven't seen them, that's why. And you'll learn more about that when we get into the strangle mastery and we start talking about options pricing. And I think I'm going way ahead now, but I believe the next one, based on our conversations, that we might be looking at is doing something, more on a mastery on the out of money butterfly. But that's down the road. So there's just so much to talk about and so much education available that we're going to provide for you on options. But there we are. We're breaking below that support level. And even with today, with the ugly tape that we had today, that wasn't a big movement to the upside in the VIX. So that is another sign of, hey, today may have been a little bit of an aberration. The Asian markets were, I was up most of the night as I normally am, but the Asian markets were down big overnight. And so I was like, we'll see how that's going to translate into our day. And so we just never really could gain too much traction in today's movement, but there was no spike in the VIX. So a down day, no spike in the VIX. Was this just a head fake? Are we getting ready to move back higher? it's sure looking that way based on everything that I've shared with you. So a little bit of a good news there of the fact that this malaise that the market's been in for 2 months is likely about to come to an end. So I figured everybody would be very excited to hear about that. All right, so let's go back and take a look at, I'll come back to our previous case studies. I did want to share with you our trade alert that we had closed out this week, as you can see on Facebook. Now, this is in our high value portfolio. For those of you that may be joining us for the first time, the way our subscriptions work is normally on an alert basis. We send each alert out with $500 or less of risk. And there have been several of them that have been less than $500 on some of the smaller trades, the momentum trades from our new search, but somewhere around $500 or less. But that does preclude some of the higher dollar stocks, Tesla, Amazon, some of those stocks. By the way, we were long both Netflix and Amazon. Both of them had banner mornings, huge upside mornings. The afternoon selling kind of brought them back down, but they were both up on the day. And so there's an interesting signal too. Old tech, the stuff that's been getting hit hard, had the best performance today. So it just doesn't feel like, I know I said that it's hanging on a cliff, but it feels like that climber is going to pull himself up rather than the fingernails give way and fall. We'll see. I mean, anything can happen, but that's just the way from the indicators, the way everything looks is like we're going to move back to the upside. But look at this. Over the last 4 days in this trade on Facebook, that was it. Here was the entry on March 17th. Here was the chart. You can see clearly what we were looking at. We had the launch pad effect. Again, for those of you that are new, is carry on. Always talking about the launch pad effect, but that's when the stock goes sideways. This is nice. Don't look up the launch pad effect on Google. You're not going to find it anywhere. I live on the Space Coast. This is kind of something that I've coined, something I've noticed over time is that when a stock really consolidates sideways and you have these lower intraday bars, you just get this flat sideways consolidation. It's kind of like a launch pad. And more often than not, the blast off from the launch pad, get it, blast off, is a big move to the upside. So we had this little launch pad looking scenario here. Facebook was starting to break to the upside. We had confirmation above the 10-day moving average. We had the 10 breaking above the 30. The DMI was looking good. ADX, I mean, is as good an ADX DMI scenario as you could ask for. And we had resistance there right around the 300 level from the previous wave 5 high. So that was the setup. And Facebook did, even with this crazy market that we're in right now, exactly what you would expect it to do. There's the move. Vertical, a little too vertical for me. So, that means time to take profits. I don't like stuff that goes vertical. I want the 45-degree angles. It didn't. It broke vertically. It's above the 10-day moving average. Bit too far for me. Plus, we hit our price target. You can't ask for more. You set a trade up. It hits your target. You need to take the gain and move. And that's what we did. So we closed this one out. And as you can see, it was a $670 gain in 4 days, nearly 60% return on Facebook. And so the initial risk, as you can see, was $1,130 was the initial risk. So that's why I was talking to you about the fact that it's in the high value portfolio. Now, I want to be very specific on this. We were looking at, over time, a number of different positions, say, oh, I wish we could do that, but there's no way we can get within our $500 of risk mandate. Our subscribers wrote in and said, hey, for those of us with a larger account, isn't there a way we can do that? So we created the high value portfolio at our subscribers' request. They brought it in and said, hey, we want to do that. So instead of a $5,000 account for impulse and $5,000 for portfolio or for volatility, so you have a $10,000 portfolio, we said our guidelines were, as posted on the website, an account minimum value of $25,000, because we're going to be putting more risk in. You can't put more risk in. We're messing up the entire risk management strategy if you're putting high value trades on a normal size account, and that's the $5,000 per portfolio. It's going to eat you up in a hurry, and then you're stuck waiting on that individual stock to move. You don't have equity to put on adjustments. So we need to follow the guidelines. So that was for a $25,000 account or larger. Those were our guidelines for that. So this isn't something that a person with a $5,000 account should have put on if they're following the guidelines. But it was a request from our subscribers. We didn't push this out. We reacted, and we want to be the end all be all for everything our subscribers want. We're doing that with the education, et cetera. So if you guys have great ideas, you want to see something, then let us know. And we have more things coming out. As I said, I mean, there's just so much cool stuff planned that you'll see moving forward. But we hadn't really talked too much about that on TradeFinder, so I wanted to share that one with you. On that's the power. See, that's the lure, right? Is the fact that you can make a decent amount of money here in a very short period of time. So that would have been, if that would have been in the regular portfolio, well over 100% just in 4 days. Still 60% in 4 days is pretty doggone good. Who's that guy? Let's get him off of there. All right, so here we are back with the market, and we'll go through and look at our case studies from the previous TradeFinders, and then we'll go through the process of seeing what we can find tonight. Looking at Werner, W-E-R-N, this was from 3-2. So that's what we were looking at on the 2nd of March. We closed at 44.76, and here's where we are now. You can see that we moved to the upside and then lower, and a bit of a downside today after movement higher, but still closed at 45.05. So a little bit higher, but today wasn't a good day there. Actually, yesterday and today weren't good there. So perhaps the wave 4 is starting, still above where the entry was, but you'd want to keep an eye on that one and see if indeed this is where the wave 4 is starting. The 10-day moving average got violated and then confirmed today. So that's not a good sign for continuing to move higher. However, we have some support right in this area here, where if the market does turn around, we could move from that support. So we'll see. Tap the 30-day moving average on its low. I look more, the 30-day is kind of the in-between. It's like the 20-year treasury, right? Everybody looks at the 10 and the 30. Those are the two big ones. And then the 20 is just kind of in between there, even though TBT is super liquid. But that's kind of the way I view the 30-day moving average. The 10-day moving average is the short term. The 50-day is the trend. 30 is just kind of in the middle. It gives you a signal based on that 1030 cross of where the shorter term momentum is going to be. So that's the way I view that. So the fact that it touched the 30-day and held, I just don't view that as a huge area of support. So the 30-day has different duties in my mind. So I'm not sure where we move from here as far as the 30-day. If that holds, great, but I think it would be more support holding than the 30-day. Royal Gold, probably the most interesting one in here. The interview that I did with Guy Adami is on YouTube now. So if you didn't get a chance to see it, you can look at it, where we were discussing all things gold, and both of us pretty much came to the same conclusion. We have no idea why gold's not moving, nor do we have any idea where gold's going to go. So, I mean, we covered a bunch of different things that usually move gold. None of them have worked. So maybe the triangle is the best place to be, which is what we have on RGLD. So this is back to the 9th of March. And then if we move it forward here, you can see still nothing has happened. Still moving sideways on this individual stock. So, but RGLD tends to really move with gold. So when gold moves, I think this will make a significant move. But I mean, gold has to move first. Looking at the 16th, last week we did AOS, and we were right there looking for an extension on the wave 5, and boy, did we get it until today. So we really had a nice movement to the upside there. And then today puts us kind of back, still above where we got in, but just barely, well, almost exactly where we were last week. But the previous couple of days were really nice. So if you were still in this one, that would have been a small gain to take. So I can understand that. But we did get a couple dojis here, testing the 10-day moving average, closed just pretty much dead on it. Tomorrow would be a big deal there. And then also we looked at last week, PSA, public storage. Check this one out. So here's where we were. And then today, bucking the trend today. Almost 2 3/4% move to the upside today out of public storage. So that one looks set up to continue up and hit its wave 5 target. So there's one that was along the lines of Netflix and Amazon that was bucking a negative tape. But I just want to remind you that even though the market looked kind of ugly at the close, really the VIX didn't do anything. So that means an awful lot. All right, so those are our case studies over the past few weeks. If you've been following us over the months, you know that our case study results have been pretty remarkable. Actually, I talked to somebody on the phone yesterday that went back and they back tested them all, and he was blown away. So it's a brand new person from YouTube that found us and said, "Hey, this TradeFinder is pretty cool," and went back and looked at them. So that was really nice to hear. All right, so let's take a look at what may be available on our pre-computed scans. Again, for those of you that are new, this software program that I'm using is Profit Source. It's an Elliott software program with tons of other bells and whistles. In my opinion, I've been trading Elliott for 20 years now, which that's mind-boggling to me that it's been that long. Been trading for 25, trading Elliott for 20, and I think I've used, well, I know I've used every Elliott software that I'm aware of. So I don't want to say I've used every one that exists because maybe there's some that I don't know of, but I've used every one that I'm aware of that exists, and this is by far the best. And I do know this is programmed exactly from Ralph Nelson Elliott's mathematical algorithm. I know there's some other ones, I don't want to mention names and get into that kind of thing, but there's some other ones that are people's personal adaptations of Elliott Wave. And my thing has been, this is the system that he created. Let's trade that system. Now, if you can create a derivative that works for you, hey, anyone that can create a technical trading system that works for themselves, absolutely do that. You know, I'm all for it. But in general terms, just for my personal preference, I want to follow the guy that created the system. And so that's what Profit Source does. Now, if you happen to be an Elliott Wave Options subscriber, the guys at Hub, which are the creators of Profit Source, have put all these searches in here for us that are in addition to what normally comes with Profit Source. So if you're an Elliott Wave Options subscriber and subscriber to Profit Source, you get all these searches. Now, if you've been watching us for a while and you're trying to decide, hey, do I want to become an alert subscriber, whatever, just remember when we showed you on the ADX, the timing could be pretty good for the market getting ready to move now. So if you've been looking for something to get you off of the chair and into the game, this might be a pretty good opportunity. Again, 2 to 3 months has been the time frame of sideways movements. We've done 2. Odds are we're about to go somewhere. And we don't care. Like I said, we're balanced. It doesn't really matter to us which way we go. Market breaks one way. If it breaks to the upside, we'll get rid of the puts and let the calls run. Breaks to the downside, we'll get rid of the calls and let the puts run. And then we have a couple others that we'll talk more about that Thursday night, that if we do go lower, our subscribers are already aware that have big vacuums to the downside that can make huge moves lower. So just excited the fact that it looks like this 2-month malaise is coming to an end. All right, so here you can see that bullish impulse, and there is one even with a down day. So certainly we want to take a look at that. Sprouts Farmers Market. Well, how about that? Any other healthy food eaters out there? Pretty cool. So looking at, wow, that actually is a really good chart too. Look at that DMI. Well, I think this would go along the line. When do you think this would come in? Because what's the criticism that people always have about healthy food? It costs too much, right? Well, you know, then you get into the argument of how much does your healthcare cost? You know, if you eat junk food and you're sick all the time, how much does going to the doctor cost versus grocery stores? But does the market view it that way? And that's my personal view, but does the market view it that way? You could see that that could be maybe not in favor with the closure of the market, but reopening. And what I'm trying to say is this could be a reopening trade story. And it's in a wave 3. It's got a really good DMI. Let's see if that is a qualified zigzag there. Nope, too much of a correction. So no qualified zigzag. So that might have been a down one then. Let's take a look at that one. Do we have a downward zigzag there? Look at that. Dead on the 61.8% corrective level. That was the end of the zigzag. And then we moved higher. Just, it's everywhere. Well, we're right in the middle of zigzag mastery. And there you go. There's a downward zigzag for you within the stock. And now it's turned, headed back to the upside. So what that means is that this is the impulse now. So that's your impulse. How far can it go? Well, that's when you look at your confirming indicators, because the A wave is similar to what the complaint used to be about people that wanted to trade wave 3, but they said you never know where it's going to go. We need to look at the 10-day moving average, don't we? Because of that. Well, it's not that overbought. Let me move this out of the way. You could see that we'd broken up here. It looked like maybe there was some separation. There is a little bit. So maybe a calm day tomorrow. There's another one of those launch pads right here. See that? Dead sideways consolidation. Boom. That's the way it works. So nice trend, kind of in the 45-degree angle, maybe 50 degrees, a little bit, but it's not steep enough to where I get concerned. Target price is around 29. That's a pretty good move out of this one. So SFM, that one's going to be tough to beat. So I'm just going to make a note of that one, and then we'll look at some others before we open it up to your questions. And again, usually your questions come in the form of symbols, but hopefully there's some excitement, energy. I feel it coming through the computer here. Everybody's energized about the upcoming week or two in the market. I know I am. So let's go back to our search parameters here. Now, another combination that you can do, and that's what's really cool about these, all these boxes, you don't have to just pick one. You can create combinations. So the software is great if you're someone that is into technical analysis, and maybe you have your own favorite indicators. I have mine. We have our technical trading system, which is what I've developed over the years of confirming indicators to Elliott Wave. Maybe you've got your own favorite indicator and you wanted to see how it works with Elliott Wave. You can create your own stuff here and combinations, but within here we can go through. So there are, in bullish wave 3, which is, this is really neat, the fact that it shows and look what's up here. Now we have the first day that a wave 3 is labeled to the upside or the downside. That's really cool too. But so let's look at bullish wave 3s. There's 418 of them, and then let's see consolidating stocks. So what we're looking for now is potential triangles in the wave 3 that look like maybe they're getting ready to break out. So my viewpoint on triangles has always been, from a trader's approach, cover both sides. And that's especially true if it's a triangle, if it's a corrective triangle after wave 5 is completed. You absolutely should be putting a strangle on then. Now, Elliott would lean, if you found a triangle in a wave 3, he would lean to the stock breaking out and continuing in the direction of the wave 3. So that leaves you where you could do a strangle, or you could make a directional bet on those along those lines. DraftKings, how about that? You got to look at that one right on Google. So That's not really, it's not that much of a consolidation. Is the ADX really that low? It is. Check that out. Wow. Look where that ADX is. That's pretty surprising. Well, even though you could maybe make a quasi ascending triangle here, right? Because there's a few resistance points there and higher lows. So I take that back. There actually is a triangle there. So that's why you just draw the lines. Sometimes you just draw the lines like a kid, connect highs and lows, like connect the dots, pictures that we used to draw. It's sometimes charts are just like that. But that's a nice ascending triangle with an ADX that low. This thing is getting ready to go. I know the options can be a little pricey on DraftKings, so that could possibly move into the high value portfolio depending on it. But man, that looks good too. So SFM is going to be tough to beat to the upside. That's going to be tough to beat as far as, so there's that wave 3. So that's the dilemma, right? That's where Elliot would say, hey, you can go ahead and trade that to the upside. I still prefer the more cautious approach of, that's especially with, now if this was an ascending triangle and that ADX had been going up with a positive directional indicator, if there was a different look to that DMI with this pattern, with the fact that we've had a bunch of higher lows, I would be more open to saying, okay, let's trade this to the upside. But with that ADX that low in a stock that can move like this, I just think it begs too much to put on a strangle rather than trade it directionally. And so being a touch more cautious maybe, but prudent is another word that could work out well. So I think that this, all right, let's go back and see if there's a couple more, but I'm going to make the notes, or I'm going to put this down. The SFMA is so good. That's to the upside. DraftKings is really good. To the downside, or I mean to a strangle. So the first two we looked at are really good. We'd have to find something significant to beat those. So we have small caps, dividend appreciation. Boy, that's odd, isn't it? That just showed you. That's a good example right there of how difficult the market has been for the past 2 months. You got small caps, which are aggressive, right? And dividend appreciation stocks, which is about as conservative as you can get, both in consolidation mode. That means the entire market has been consolidating. So we've talked about money rotation, but really, I mean, we took advantage of the value pop that we had on VTV in the value ETF. That worked out really well. That's kind of flattened out as well. The whole market has been consolidating. So something's getting ready to happen. We're getting ready to go. Now, South Korea, Taiwan, so Asia is also, that's interesting, isn't it? Let's just look at the charts to see what they look like. Yeah, so that's pretty significant consolidation there. Just interesting, just taking a look at that just for the curiosity of to see what the patterns are doing. I don't trade these markets too often, so wow, that's a pretty nice triangle though. See, sometimes we struggle to find, and that's what trading is on a day-to-day basis, right? Trying to find trades. Sometimes you don't find any, and then tonight we're finding tons of them. So I think that factors into the whole picture of, it seems like something wants to happen in the market. So let's look at Google. Can't not look at Google. been trying to, I mean, been looking to put something on Google in the high value portfolio for so long. And it's, I mean, you couldn't trade this move, right? Because there's the gap up. So you can't trade that. And then here's what happens. And just why I always say, you know, doggone gap. You don't like that. So it goes sideways. So we were vertical. We were way overbought on the big gap to the upside. And now we've consolidated. And we have a little bit of a triangle. It isn't the largest or greatest formed triangle, but it is nonetheless a series of lower highs and higher lows. And doji today. So we have pretty nice symmetrical triangle, and we have a doji near the point. It may not be long before Google breaks out. A lot of people look at Google as a an indicator, a leader, bellwether like Apple of the market. So I'm gonna make a note of this one too. I mean, we need to follow that as well. So holy cow, trade considerations everywhere here. All right, so don't usually go to 3, but I think all 3 of those are valid enough to bear watching. Usually if we do 2, we try to do directional and a volatility, impulse and volatility, but yeah, they're all too good to ignore. So those look great. So I hope you found that interesting. One thing that I wanted to share, and then we'll get to the questions, is things that that you learn over time. You're trading when you're trading. As long as I've been trading, you go through really good times, and then you go through sideways times, which are challenging. When the market goes up, the market goes down, and it stays sideways over the course of 2 months. As I mentioned earlier, that's the one thing that you don't want. So that's just not the first time that's ever happened. This is not the last time that's ever happened. So, or going to happen. So what do you do? How do you manage through this time frame? That's what I wanted to share with you. Well, one, as you know, we don't compound. We put on the website. This is why. You know, it's almost like January was a stellar month, right? January was the best month I've ever had in 25 years. Well, maybe there was something back in 1999. I don't know, but I was doing risky stuff, so I don't think that counts. When I understood what I was doing, January was a great month. Well, if you have a great month, is that when you pour the pedal to the metal, or is that when you back off? I mean, we look at some point in time just how the universe works with general probabilities, right? If it's everything is kind of like this bell curve. So if you've hit the peak, the most likely the least point of resistance would be to come back down a bit. So it's just like in any sort of mathematical system that, you know, when you hit a peak, that's when you back down a little bit. That isn't when you go balls to the wall, put everything in, because the percentages say you come off a fantastic. It's like golf. Let me use golf as an example. If anybody plays golf or has watched golf, a guy goes out and he shoots 62, shoots 10 under par, shoots a fantastic round. He's more likely to shoot over par the next day than under par again. It's so difficult to follow a fantastic round with another fantastic round. It just doesn't work. Things just don't work that way. So you'd be more apt to say, hey, he's probably going to have an average to maybe not so good day the next day. It's you can say your client, everybody that I know in golf have talked to about this, and we all know it. We all see the same thing. So I mean, it's the same type of thing. But it's, you know, like Buffett says, when there's blood in the streets, that's when you get greedy, right? You don't get greedy when things are going fantastically well. That's when you say, you know, maybe we should back off a little bit. Odds are, you know, things aren't going to stay this great. So, you know, that's what Buffett does. He backs off when everybody else is greedy, and he comes charging in when he calls it. That's his term, not mine. Blood in the streets. He used that. If you don't like that analogy, I'm just reciting what he said. So don't compound. Always leave cash available especially for the way I like to trade with adjustments. You always want to have cash available in your account, and make sure that you're being prudent. Don't get greedy. Greed kills. In other words, don't put positions on that are too big for the account size. It's over time, this works out really well. You can grow a really nice account. So anyway, just wanted to share those things with you. So let's go ahead and take a few questions. John, are you there?
Yeah. Hi, Rob. How are you? Good evening.
Good to hear your voice on a Tuesday night.
Yeah, unusual. But I've got a number of questions for you. Jesse has a question in relation to the SPY. And the question just goes to the Elliott wave structure. So the question is the SPY in a wave 2 correction after completing an A, B, C, D, E downtrend preceding 5 Elliott waves? So I think the question goes to the internal structure of the current wave 5 and whether or not that last move down was a corrective move that is now we're looking at a new impulse move and potentially the pullback is wave 2, I think, is the question.
Okay, so if I get this right, then her question, because I think I misunderstood it first, I'm talking about an ABCD downtrend, but if the current move could be a wave 2, in other words, the completion of the wave 5 was over here and it's looking like an extended wave 5. So if I get the question right, I think she's saying that maybe that did end the wave 5. And so then we're starting a new impulse move. And so this could be the impulse to the upside and this be the wave 2. So we could actually draw that out. I'm sorry?
Yeah, she's confirming that that's what she's asking. Yes.
Okay. Yeah. So let's see. Yeah, it qualifies. And so interestingly enough, the 61.8% target would be 403. So that gets us above 400. And then the 100% extension is 413, which is getting awfully close to that 420 number that we've been looking for a long time. And mention this all the time with Elliott wave, the more Elliott wave patterns that give you the same potential target, obviously, the more likely that target is of being hit. So that's a really interesting point. I honestly hadn't looked at it that way. I was still more focused on the wave 5 extension, but yeah, I mean, that very well could be. We'll see. But that's a good point.
Thanks, Rob. And Santino's asking if you could take a look at Home Depot and INTU.
Home Depot and then into it. Woo. Boy, we've looked at Home Depot a bunch of times and it's been so boring, but not anymore, huh? So I see why you want to look at it. But so here's that long sideways movement. Thank goodness the market doesn't usually do that. But the stock stayed in a trading range for a while, but it's after a head fake to the downside, like a zigzag pattern right there. And down to the 61.8% level. And then now we're rocketing to the upside. So super strong. Let's take a look and see what the DMI is getting by. It's just so vertical. That's what I don't like. That makes me nervous when we go this vertical, because what goes straight up quite often goes straight back down, right? So that's the concern there. But man, that's about as good of a confirming DMI as you can ask for. So is housing really going to get another run? So that would be suggestive that back into what we've been talking about and all those updates on interest rates, that would be suggestive that interest rates are going to calm, which, is kind of what I've been thinking with the ADXs that are in astronomical places on the interest rates on the 10, 20, and 30. So calming there would certainly give some fire to home building stocks, and and come to think of it, in addition to this, today some of the home builders were outperforming in a bad tape. They weren't all green, but they were well outperforming what the market did. So pretty interesting. It looks great. I just wish it wasn't so vertical. Little bit overbought, not super overbought at this point in time. So maybe we come back down and test this. This is what I would be looking for personally, but if you're in it, the person that asked if they're in it, hard to find any reason not to stay with it at this point in time. It looks great. So maybe we come back down and test this area. Would come back down to that support line. 10-day moving average would catch up. That would work out perfect. You've heard me say often that market doesn't always do what would set up perfectly, but that would be nice. Just a little bit of a pullback, let the 10-day moving average catch up, test that support, and then take off again. Could easily see that happening in Home Depot. So let's look at Intuit. Well, there's a great descending triangle there. Where's the ADX? Yeah. It's pretty low. Well, there's your, we got flats, zigzags, triangles, everything going on in this stock. But it's a $380 stock, so again, we won't be able to do it in the regular portfolio just because of the fact that it's going to be too expensive. But that's a fantastic triangle. Okay, so there's your corrective triangle in the wave 4. Happens a lot. So if you want to trade this one directionally, my personal view, again, you can go with Elliott and go a little more aggressive, but I would want to at least see it close back above that 10-day moving average, break out. There's going to be so much room for this to run. You can give it a day to break out and a follow-through day and then trade it to the upside if you wanted to, or put on a very expensive strangle. But it looks great. All right, what's next?
Thanks, Rob. The next question is from Craig. He's just asking if you could talk a little bit about the difference in the Dow, the SPY, the Qs, and the Russell, and why some are going up lately and while others are going down.
Well, there was that market rotation that we talked about before with the January effect. This kind of all really got going. We did that recording on the January effect where we said value tends to outperform, small caps tend to outperform. So you saw the IWM. We'll take a look at that too. But here's the Dow, and the biggest disparity, I think, or rotation has been with the NASDAQ, right? The Dow and the S&P have been more moving, well, not really together because there's the DIA, which is the diamonds, which is the ETF for the Dow without having to pay the cash market prices. And then, so you look at that pattern, and then there's the SPY. So they're not identical other than what's occurred just over the last week or so with the upward move and then this move back down. But it's been the NASDAQ that was leading the way. The NASDAQ was leading the market. There's no question about that. Last year, the big high flyers, the FANG stocks, as everybody calls them, and then they got hit and they vastly underperformed. So then the NASDAQ was underperforming the Dow and the S&P. That's kind of when that value area took off at the beginning of the year, and those high-flying tech stocks got hit. Well, now the NASDAQ is turning back around. And as I mentioned today, we had Amazon and Netflix. Both had not as good of days as they were in the morning, but still good days on a bad tape. So does that mean the money is now moving back to, because the money always has to go somewhere. The money rotation always occurs. So if we look at the Qs here, on a not so good day, kind of all the indices finished to the downside today. But note that there's a bit of a triangle forming here. You put the Elliott wave pattern on, very, very similar to what we just looked at on Intuit. almost the exact same pattern here with the wave 4 and this symmetrical triangle. So the Dow probably was a bit more trading to the upside than the SPY. I would submit that the last week or two, the Dow and the SPY have moved kind of together again, which they tend to normally do. It's the NASDAQ that's the one that's been all over the place, where here's where it was leading, as I was mentioning, the end of last year, where it just right into the February timeframe, then it got hit. So now it's consolidating. So that's just kind of classic Elliott wave stuff, right? Just sometimes we just have to be patient and let things happen. Be nice if the market just ran a direction all the time. Just doesn't do that. But there's another suggestion. You know, what's the whole theme of this entire TradeFinder, Ben? The market's getting ready to do something, right? There are way too many indicators telling us the market's getting ready to do something. Now we have a really nice triangle in the Qs as well. And the NASDAQ's been the laggard. And was that a sneak peek today, or was that a head fake with Amazon, Netflix, etc.? So that's a good question. Kind of brought us back to the main theme.
Thanks, Rob. And yeah, it was just a comment from Jessie here, who was saying she also jumped out of Facebook one day early, made $100, but should have stayed in and should have made a couple of thousand. So I just thought I'd pass that on. Okay. And then we also have a question from Mike, who is asking if you could take a look at USO, AMD, and FCX. So I can remind you of those.
You remember all that. USO, FCX, AMD. Yes. Is that right?
Yeah.
AMD. How many webinars in a row have we looked at AMD? This is going to beat Netflix and Tesla. Tesla, remember, it was Tesla every time. I think there's been more on AMD now. I know I say that every time, but holy cow. So we knew this was coming, right? I mean, that run that oil had been on for such a long time. And there you go. See, this is the same thing that's going on with interest rates. This is why I think there could be energy to the upside in the market. That's the exact same kind of ADX that is in, just watch the SPY update. It's the same ADX that's in the interest rates. So we had oil going up, good confirmation. So that really was not that vertical. So we had, this movement here, which was great. That is a tiny bit more vertical, not enough to where that would have concerned me, but the ADX did. The ADX got to 55. That's really high. And so what happens? It pulls back. Interest rates should do that as well. And if they do, that's where your Home Depot can continue. Home building stocks should do well. Maybe gold finally gets a bid. Who knows? But it should be fuel for the tech stocks. And maybe we're getting a preview of that. Maybe they're looking, the market always looks ahead. And even on a bad tape, maybe money will come back into big tech. All those things could very well happen. So Freeport McMoran is FCX. And trading this, you're probably just as frustrated as we are with gold. Just amazing that gold refuses to do anything. Pretty nice trend channel there. And zigzag pattern there. Wave 4 is only corrected 21%, so that hadn't even hit the first fib level yet, so that doesn't really count. So it would come back and look at the 10-day moving average here. Closed on it yesterday, broke below it today. So tomorrow, an important day. If you get follow through to the downside, then you're probably going to create this wave 4. Yeah, there's definite influx of sellers have moved in. just fascinating with gold may take another beating based on the way this is setting up. So anyway, it looks like could be a little bit more weakness in FCX, and then we'll see and regather itself. But AMD, we talked about that one last Thursday as well. We had mentioned a couple of weeks ago that it needed to get above 85. That was the exact level that it mentioned, and it didn't do it. It hit it dead on the nose and came back down. So now we're back to 75. So you know your levels now on AMD. 75 is support. It needs to hold there. It's working this downward zigzag here. Look at there, two of them back to back. Look at that. Boom. Dead on the 161.8% extension on that low there. So just amazing stuff. And then it looks like it's possible that there's another one going on, which I know is not what you want to hear if you're long AMD, but you have support pretty close by. $74 is 100% extension. So even if the zigzag completes, it's still right there at support. So that area right there, 75, looks like it might get tested again. And same scenario then comes up again. It needs to hold. Otherwise, it gets super ugly. Just not good for AMD if it doesn't hold 75. If it does hold 75, now you come back to that same scenario of you need to see it break above 85. So it's kind of in one of those dead zones in between. Supports at 75, resistance is at 85, and you're just guessing if you do anything in between those, or you could follow that zigzag down a couple more points. But at this point in time, it's already halfway there. Maybe just wait and see if it holds that 74, 75 level. But yeah, that's it. 75 and 85 are the two key levels. Just watch those. Break below it, go short. Break above 85. Then you should be able to go long again. Okay, couple more.
And we're pretty much at time, so I might give you one last one, which is from Andrew, and he's asking if you could take a look at Apple.
Apple. So Apple didn't quite finish to the upside like Netflix, Amazon, et cetera today for the big tech. But as you saw from that triangle in the Qs, if we do get a breakout on the tech, if interest rates come back down, money will go back into the big tech because it loves it. And I just think it just seems like maybe that was just a test today. Could be a head fake. Maybe all that gets wiped out tomorrow. But as far as looking at big tech, if we could get some follow through tomorrow, I think that's a positive for the market. Interest rates, look at the 10-year today, and then we'll wrap that up because I've talked about interest rates so much and how important they are. You can see, there we go. See, that's what's just the pullback is starting. Now look at this DMI. See how high it is? And we just showed you the same thing that occurred in USO when the ADX got so high. What happened? Oil backed off. And so looks like the same thing may be occurring in interest rates. That should be constructive for the market. If not, so just to finish the final thought, if interest rates pull back down and that's not a catalyst to drive the market higher, then we could be looking at a downward scenario in the markets. And as I said, our portfolio is pretty balanced right now. So just, let the market tell you which way it's going to go type of a thing. So hope you found tonight informative. I thought we had a lot of really good information. We found a lot of great case studies to look at and really good questions. So thanks for your attention. As always, very much appreciate your time. Have a great week. See you next week.